The stock market earthquake that originated from the state-owned sector squeezing the market sector is still raging, and the energy accumulated by various sectors over the long term is also taking advantage of the situation. The fracture zone spread everywhere, and the aftershocks added too much uncertainty to the earthquake relief in the stock market. As long as the energy of the fracture zone is not released completely, the premise of post-disaster reconstruction will be unstable, and no matter how good the expectation and planning is, it is just wishful thinking. Twisted due to compression, fractured due to twisting, lost control due to fracture, and balanced to complete a cycle due to loss of control. Earthquakes are like this, so is the stock market. Under the pressure of major sectors, policy markets are rapidly distorted. The structure of the stock market is distorted, market order is distorted, and management concepts are also distorted. The result of the distortion is a fracture at the squeezing point, which is reflected in the fact that the current stock market goes free fall without hesitation. Except for the gravity of Earth, it seems that no one can stop the decline of the stock index and the shrinking of the turnover, the depressed popularity, strange rumors, the same fluctuations as the lost feast, the hot money around, and the unexpected policy measures all make the ruins after the disaster more strange. As long as the squeezing of various plates does not stop, the twisted structure always has the possibility of mountain and valley building, and each fracture will trigger a chain reaction, enhancing the impact force of the fracture. The peak of the policy market is manifested in the policy squeezing system and monopoly squeezing reform. Where the system is constrained by policies, it is not the reversal of policy serving the system that makes policy the most important variable that dominates the stock market. The checks and balances and regulatory functions of the system have no power in the face of strong policies. Although this pattern is widely criticized, it is still taken for granted and taken lightly, until policies can no longer replace the system to regulate the market, and the market no longer dances along the baton of policy, and this situation cannot continue. For example, in the context of untraded shares non-crash, reducing stamp duty is obviously not a desirable rescue policy. The essence of the stock market is determined as emerging transition, which literally means trying first for transition reform. It makes the stock market one of the main battlefields of reform, but in reality, it is not in line with emerging transition. 80% of listed companies are state-owned enterprises. 80% of stock market funds are trapped by state-owned enterprises. Central enterprises are still queuing up for listing, and various state-owned asset management committees are also using their brains to set up a maglev system of injecting capital, listing, and shedding burdens to circle money, completing the strategic transformation of becoming bigger and stronger, consolidating and strengthening the monopoly position of state-owned assets and enterprises, thus deviating from and distorting the functions of the stock market, squeezing the space for reform by monopolies. These two compression zones are still accumulating energy and ready for deployment. There are at least 4 fracture zones in the distorted stock market structure. A share extruded small and medium-sized plates. Institutional pressure on shareholders. Hot money squeeze funds and institutions. Profits squeeze dividends. And the collapse of these 4 fracture zones directly leads to the loss of confidence and charm of the stock market. The Chinese stock market boasts 5 shares simultaneously: A shares, B shares, H shares, red chip, and the plant gem, but the other 4 shares are all complementary in terms of capital structure. As of July 1, the total market value of A shares was 21.76 trillion, 17.66 trillion, down 18.18 trillion, 14.8 trillion from the end of last year. The total market value of B shares was only $8 billion. H shares and red chip accounted for about 53% of the total market value of Hong Kong of $2.6 trillion. The above figure is October 2007. Whether it can 1.3 reach $1 trillion at present is unknown. The gem has not been launched for a long time, which makes A share dominant, squeezing the operating space of other stock markets, leaving no choice for social investment, but to obey the rule that one market can be killed before another. There is also a proportion imbalance within the A share market. It is a chronic disease that institutions squeeze shareholders. In addition to the fact that shareholders briefly overthrew the institutions before May 30, 2007, most of the time, shareholders were in a marginal state and became the blood supply cicadier at the mercy of others. In the interinstitutional dialogue, shareholders struggled again and again between ecstasy and pain. The scale of hot money in China has set records. According to a view released by Xinhua News Agency on July 1, the inflow of hot money into China over the past 5 years is about $1.75 trillion, and the pace of entry has not slowed down. In addition to indicating the attractiveness of China's economy and the preference of foreign investment to invest and avoid risks, the greater pressure is the erosion of China's asset prices and the discovery of value depressions. The result is an increase in asset and resource prices, exacerbating inflation. In the stock market, it manifests as a facelift, short selling, dodging old positions, buying chips extensively, manipulating enterprises, and squeezing out other capital, forming a dominant position for foreign investors, so that they can generate momentum and make waves at any time. In an article by Xinhua News Agency, hot money seems to be the culprit behind the stock market earthquake. It has become almost a convention for listed companies to distribute no or less dividends, which has led to investing in the stock market becoming a simple speculation. The result of turning dividends into profits is to create an ideal concept for the refinancing of listed companies, thus emphasizing market financing and neglecting value creation. Paying more attention to profit rate than dividend distribution has become the most typical fracture zone of the stock market, enough to take away the premise of its existence, which makes the stock market more like an irregular casino. At present, there are some invisible fracture zones floating over the ruins of the stock market, but they are not more visible. The danger of faults is small. These are the 4 fracture zones under the distorted market order. Speculation squeezes rationality. Off-site comments squeeze on-site analysis and judgment. Rumors squeeze market regulation. Financial corruption squeezes the principle of fairness and justice. These pressures form the surge on the anti-risk embankment of the stock market and the barrier laid upstream of the financial reservoir. At the same time, they are also the number 1 wanted criminals currently endangering the stock market. In a situation where the stock market structure is distorted, speculative enthusiasm often overwhelms rational investment behavior, just like the crazy entry into the market before May 30, 2007 saying don't sell even if you die. Of course, it is precisely these people who are trapped the worst. They have made all the wrong mistakes that shouldn't have been made. Off-the-market comments mainly come from some so-called celebrities such as Soros, Rogers, Hu Liang, and foreign investment banks such as Morgan Stanley and Goldman Sachs. They have become the favorite of the media, whose voice almost dominates the analysis of the stock market. On the contrary, the influence of professional analysis reports cannot stimulate waves. This distortion will only ferment the conspiracy theory and let rumors squeeze the regulation of the market. The closer one approaches the power level, the more they are able to prioritize information and make a fortune, leading to financial corruption. The 3 principles of squeezing the market. Such a market will only enter a state of madness, and it is not an exaggeration to say that danger is rampant and the country is lost. In addition, the distorted management concept has formed 3 new fracture zones. Historical problems squeeze the future space and break through the pace of gradual reform with ideological pressure. Classic theory and elite consciousness squeeze the spirit of the 17th National Congress. The root cause of this stock market earthquake is already clear, but behind the 2 major sectors lies the conflict between the idea of overcoming historical issues and the future space and gradual reform. As we all know, the historical problems of the stock market have a long history and deep grievances, which determine that dealing with historical problems can only be solved by wisdom and not by force. Gradual reform is undoubtedly a stable and ideal means, but financial breakthroughs. The consciousness of the government dominates the management ideas of the relevant functional departments, hoping to accomplish its job and solve the problems accumulated over a decade in 3 years at once, pushing the reform of state-owned and central enterprises into the capital market, and completing the securitization transformation in a compressed manner. Therefore, we are willing to overdraw the future and use radical means to forcefully advance. In such a one-sided situation, it is inevitable that fractures and collapses. After several ups and downs, investors have become more aware of the mysteries of the stock market, and their response is to only focus on short-term investments, make quick money, make quick decisions, and turn investment into speculation. However, this did not bring any ideological impact to the management, and the elite consciousness remained strong. When the stamp duty was reduced to 1/1000, officials from the Ministry of Finance made it clear that this would not be the case again. In the future, risks should be taken at one's own risk, and no rescue measures should be expected again. This unequal position has turned the stock market into a controlled rescue station, and the shareholders have become a group of rescued people. Obviously, this is contrary to the spirit of sharing reform achievements and increasing property income proposed at the 17th National Congress of the Communist Party of China. Such a blatant departure from the national policy ideology and the harm of forming a fracture zone is astonishing. Continuous new lows have made China's stock market one of the worst performing stock markets in the world. But the above fracture zone began eventually. It always threatens the confidence, operation and structure of the capital market. Some fracture zone rise and fall with the change of the situation, and more are original seen and built in. Even if they are found, it is difficult to solve them, which undoubtedly increases the difficulty of earthquake relief in the stock market. In view of this, the peripheral plate can become the target of the stock market turmoil, thus shifting the focus of contradictions. In fact, the most hidden danger is the many fracture zone in the stock market. 3. Local state-owned capital accumulates trillion yuan for injection after the share reform. The management defined the state-owned securitization as the long-term core task of China's stock market. Central Enterprise leader,